Good morning, everybody. This is Chrisi from Solstice ATR and Balkan Capital Research. Hope everybody's doing well on Sunday morning. What I'd like to do is basically cover the Friday candle because it was a little bit bearish on Friday compared to other days we've ever had for a while. But what I want to say about it, the key factor and points is understanding technicals and basic foundations of reading candles and profile. So let's get started. I'm not calling this as a short. It may turn around and do the opposite of what everybody's thinking because we start earnings season report. We have Tuesday, Apple, Amazon, Microsoft, and Starbucks kicking off. Then on Wednesday, we have Tesla, Facebook, Microsoft, and McDonald's. On Thursday, Amgen, Visa, and Alexian. So keep an eye on the earning. I am not short yet. I traded to the short side and traded to the long side on Friday. So had 16 trades, and out of the 16 had two bad ones on resets, and the rest were perfectly executed to the downside and the afternoon executed to the upside. So let's start first of all by taking a look at the SPX, the Nasdaq, the Russell, and the Dow, combination of those four instruments on a weekly 3-year chart. We are still in a cone. We are in an up channel, and we have a sharper channel as of November 6th. We started this move up. We had a little reaction on Saudi when they got attacked that week, rallied back up when we continued higher. We had an inside candle of the prior week on the combination of those four instruments. If I do change it to the daily chart, I will show you the gaps on it. This is the daily. And if you noticed from, okay, why is this doing that? Okay, let's zoom in from here. I don't want to make it too big because that's more sufficient from November. You can see this major gap. The second one is here. Third one, fourth one, fifth one. And we had a large one up here which we eventually took out. I'm going to keep this up here for a reason because we are still holding the simple moving average, and this is my 18. I'll click on it to show you. See, it says simple moving average 18-day. Most people use a 20. I am using an 18 for a reason. I'm still in an up channel. We have not came back to this first channel or the 50 SMA or the 38.2 fib. If the earning report is a little bit weaker or we end up on the other side of the fence and we get continuation, this is your first target to the downside. If this thing turns and goes back above 43,260, watch your fingers being short because you'll end up on the wrong side. So let's go take a look at the S&P 500 and we'll look at the profile. I'm going to try to keep it short, sweet, and to the point. This is the daily channel. I know my candles have a lot of technicality in them, but what I want you to understand, we're still in an uptrend. If I look at it from here, if I do take the overnight off, it'll show those gaps here, which are highlighted in here. We retraced at this level last time to this channel. I have that baby blue. We continued higher. We fell through the yellow channel, which I'm going to take out of here because I no longer need it. Remove drawing because it's already in there. I know where it is. Remove drawing. So that channel is gone. I still have the wider ones from before, and I have the narrow ones here. So if I take a look, we have the 18 simple moving average still here, and this channel down here, first two to be rejected. If I do end up going above 33.02, 33.08, it becomes bullish instead of bearish. See, my indicator shows it's bearish below the 33.0875. Look at what the trend gives you and what the earning report does in order to be in the trade. And if we do take the overnight off, we could go to style in the setting. Usually the futures, if you uncheck the overnight action, then you can see the price action with the gaps in the overnight. They are right here. All of them are very visible. We still got 1, 2, 3, 4, 5, 6, 7. We took that one out. I'm going to keep that one on for a reason. We touched the 18 SMA. This is the down channel, and the second one would be down here if we cannot go back higher. Remember, trade what we see, not what we think. And let's go to the monkey bars. We're going to go style. In the setting, to understand how the monkey bars work in the volume profile, you hit the monkey bars, and what it'll do, it'll give us an overall daily price action for, this is a 3-month daily, so it combines all the volume profile where the value area high is, where the value area high, this is the POC, and this is the value area low. Where there is gaps, usually they are revisited, and usually when we go up and down, this is where the basically this open was, and this is where we closed on Friday on the longer time frame. What you do, you go from daily, and I'm going to go to a 15-minute 5-day price action. If you notice, we were range bound. We had the values up and down. We were consolidating. We looked up on Wednesday higher. We had a poor high up here because if you combine them, this is more of a 3-tick axis up the top, which means the candle on the daily chart went up, got a little wick on it, and we came back down. We opened on Thursday down. We pushed back up. This was the open. We pushed to come back inside the prior value areas of those from the days before, which was Wednesday, Tuesday, Monday, and this was the Friday prior action. We fell down and we came back up, and this was Friday's action. If you look at it, we have a lot of thin volume profile. Every time we fell through the 23, 24, there's no volume here. We fell through that POC. We couldn't hold the 26, the prior day's close on Friday. We fell through the 29, 26 was the close. And we eventually came to the overnight or the price action, the 3100, 3301 quarter. We fell through it, and you notice here this is thin profile as well. We ran through it very quick. The POC shifted. We had one distribution. This is the second distribution, small one here, third. Then we had 4 distribution, 5 distribution. We came back to basically the POC basically shifted lower on a thin profile, and it closed around the 94, 75, 95 area. So this is our POC. This is the close, which was 93, I believe. What was it? There it is. It's on the market, 93 quarter. So, but we traded a little bit. So this is why it shows at 415. The close is a little bit different, 91. So the volume profile, in order to come back, you have to clear the 330250 and the 3308 area in order to continue back up. If the sentiment is still lower, be careful of it because the trend may change and we end up on the other side. So we go from style, we bring it back to the standard, and this will give you the daily. So what I'm going to do, keep the overnight off, and I'm going to go to 20-day 78-minute because the market usually trades on a still 415. The futures, they open up at 9:30 and they close at 415 East Coast. This is why I use a 78-minute instead of an hourly chart to make the instruments work a little bit better for us in the overall market trends. Every time you see that there is a gap, usually it refills. There's a gap, usually refills. Gap, usually refills. We continued. That was the gap that we had prior. We had this one from a couple of days. We revisited it, and eventually we fell through it. And this one no longer valid, which we can take off, remove drawing. But I'm going to keep that one here for our eyes to see. We are in the down channel. If this is considered a flag and we cannot come down through this channel and eventually fall down here to the 20, 32, 59, 55, 45, look for a possibility of a reversal going back up because of the earning report. Keep an eye on the earning report. I will repeat what they are. Tuesday, the ones I watch is Apple, AMD, Triple M, and Starbucks. Wednesday, Tesla, Facebook, Microsoft, and McDonald. And Thursday, Amgen, Visa, and Alexian. And most important, trade what we see, not what we think. And please, if you like our help, check us out on Solstice ATR or Vulcan Capital. We're here to help you, and we are on Discord. Have a wonderful week, and see you on Monday. Over and out.